Institutional Equity Research Report, NASDAQ, FRVO. Fervo Energy Company, drilling its way to 24/7 carbon-free power. Section 01, Executive Summary. Fervo Energy Company, NASDAQ FRVO, is a Houston, Texas-based developer of enhanced geothermal systems, or EGS, a technology that borrows horizontal drilling and fiber optic sensing techniques from the oil and gas industry to unlock geothermal power in places where it was never naturally accessible before. Co-founded in 2017 by CEO Tim Latimer and CTO Dr. Jack Norbeck, Fervo went public on the NASDAQ Global Select Market on May 13, 2026, pricing an upsized IPO at $27 per share and raising approximately $2.2 billion in gross proceeds, by several accounts, the largest renewable energy IPO in history. In plain terms, Fervo drills wells much like a shale oil and gas company would, but instead of pumping out oil, it circulates fluid through hot rock deep underground to bring heat to the surface, which then spins a turbine to generate electricity. Because this heat source runs continuously, geothermal power is firm. It doesn't depend on the sun shining or the wind blowing, which is exactly the kind of round-the-clock electricity that AI data centers and heavy industry increasingly need. Fervo's flagship project, Cape Station, in Beaver County, Utah, is already the largest enhanced geothermal development in the world. With its first 100 megawatts nearing completion and first power targeted for the fourth quarter of 2026. The stock's post-IPO path has been a roller coaster. Shares jumped as much as 41% on trading debut, climbed to an all-time high of $42.65 within 2 days of listing, and have since pulled back to roughly $25 as of July 20, 2026. A 52-week low of $22.66 was set just days before this report, even as Wall Street analyst sentiment remained overwhelmingly bullish, with 10 buy ratings, 0 sell ratings, and an average price target near $46. Key facts at a glance: core technology, enhanced geothermal systems, horizontal drilling plus fiber optic sensing plus reservoir engineering. Flagship project, Cape Station, Beaver County, Utah. Phase 1, approximately 100 megawatts, with first power targeted Q4 2026, and Phase 2, 400 megawatts, targeted commercial operation date 2028. Contracted backlog, 658 megawatts of binding power purchase agreements, representing approximately $7.2 billion of contracted revenue. Anchor customer, Google, geothermal framework agreement for up to 3 gigawatts of capacity through 2033. Q1 2026 revenue, $61,000, essentially pre-commercial. Q1 2026 net loss, $31.8 million. Post-IPO liquidity, approximately $2.2 billion gross IPO proceeds, plus $421.4 million of non-recourse project financing secured for Cape Station Phase 1. This report is intended to give both professional and retail investors a clear-eyed, plain English view of Fervo's business, its first quarterly report as a public company, and the key risks and catalysts likely to drive the stock over the next 12 to 24 months. It is not a recommendation to buy, sell, or hold FRVO shares. Section 02, Investment Thesis. The bull case for Fervo rests on a simple idea. Power grid needs more firm, always-on electricity than it has had to add in decades, and geothermal is one of very few technologies that can deliver that firmness without carbon emissions and without the multi-decade construction timelines of nuclear power. Fervo is, by most third-party accounts, the clear commercial leader in enhanced geothermal. It has the largest EGS project in the world under active construction, a Google framework agreement worth up to 3 gigawatts, and $7.2 billion of contracted revenue already under binding contract before its first megawatt has even reached the grid. The bear case is equally direct. Fervo generated just $61,000 of revenue in the most recently reported quarter, is burning through capital at a rapid pace, $172.8 million of capital expenditure in a single quarter, and its entire investment case depends on successfully completing first-of-a-kind utility-scale drilling and power plant construction on schedule, something no company, including Fervo itself, has ever done before at this scale. The stock's roughly 40% decline from its post-IPO high within 2 months of listing suggests the market is already recalibrating how much execution risk to price in, even as sell-side analysts remain almost uniformly bullish. Thesis in one sentence. Fervo Energy is the clear first mover in a genuinely novel, high-potential form of firm carbon-free power, but it is still a pre-revenue construction story whose valuation already reflects a great deal of optimism about flawless execution at Cape Station and beyond. Section 03, Company Overview. Legal entity Fervo Energy Company. Headquarters Houston, Texas. Exchange and ticker NASDAQ Global Select Market, ticker FRVO, Class A common stock. Year founded 2017. Co-founder and CEO Tim Latimer. Co-founder and CTO Dr. Jack Nobeck. Chief Financial Officer David Ulray. Chief Operating Officer Sarah Jewett. Promoted June 2026. Employees approximately 212 as of January 2026. IPO date May 13, 2026. Offering closed May 14, 2026. Governance. Founders retain supervoting control via Class B shares. Mission. Fervo describes its mission as making enhanced geothermal a repeatable, industrial-scale source of firm carbon-free power, positioning the company as a foundational piece of the always-on clean electricity theme alongside advanced nuclear and squarely aimed at the AI-driven demand for reliable, round-the-clock power. Corporate milestones. 2017. Company founded by Tim Latimer and Dr. Jack Nobeck. 2020 to 2021. Project Red pilot with Google demonstrates commercial viability of EGS technology at Nevada test site. 2022 to 2025. Raises over $1 billion across multiple private funding rounds, including a $462 million Series E led by B Capital from investors including Devon Energy, Capricorn, DCVC, and Breakthrough Energy Catalyst. 2023. Begins construction of Cape Station, Beaver County, Utah, permitted for up to 2,000 megawatts of total capacity. March 2026. Executes geothermal framework agreement with Google for up to 3 gigawatts of capacity through 2033, including 1 gigawatt in the first 2 years. April 17, 2026. Publicly files IPO registration statement with the SEC. May 4, 2026. Launches IPO roadshow with 55,555,555 shares at an indicative range of $21 to $24. May 11 to 12, 2026. Upsizes and prices IPO at 70 million shares at $27, plus a 10,500,000 share over-allotment option. May 13 to 14, 2026. Begins trading on NASDAQ under ticker FRVO. Offering closes. Over-allotment exercised in full, raising total gross proceeds to approximately $2.2 billion. June 2026. Closes $421.4 million non-recourse project financing for Cape Station Phase 1, the first such financing for an enhanced geothermal project globally. Commences Cape Station Phase 2 construction. Validates a record hot well at the Blandford Geocluster at 555 degrees Fahrenheit at 11,200 feet. June 22, 2026. Reports first ever quarterly results as a public company, covering Q1 2026. Section 04, Business Model. Fervo's business model is that of an independent power producer, not a technology licensor. The company develops, builds, owns, and operates its own geothermal power plants, then sells the electricity under long-term power purchase agreements, typically 15 to 20-year contracts, with utilities and large corporate buyers such as Google. This is a fundamentally different model from a reactor or turbine manufacturer that sells equipment to third-party plant owners. Fervo captures the full economics of electricity generation over the life of each project, but also bears the full construction, financing, and operating risk. Revenue today comes almost entirely from Fervo's own development activity rather than electricity sales, since Cape Station Phase 1 has not yet reached commercial operation. Once operational, Fervo's revenue will be driven by the fixed or indexed price per megawatt hour specified in its power purchase agreements, multiplied by the volume of electricity actually delivered, meaning that, unlike a software company, revenue growth is directly tied to how many megawatts of physical power plant Fervo can successfully bring online each year, which is fundamentally a construction and drilling execution problem, not a sales and marketing one. A key part of the model is project financing. Rather than funding every well and power plant entirely with corporate cash, Fervo increasingly uses non-recourse project debt, like the $421.4 million Project Granite facility for Cape Station Phase 1, secured against the specific project's contracted cash flows. This allows Fervo to build more megawatts per dollar of corporate equity, but also means a growing share of future project cash flow will first go towards servicing project-level debt before flowing up to the parent company. How to think about it? Think of Fervo less like a typical clean tech company and more like a specialized power plant developer and operator, similar in structure to a renewable energy independent power producer, but using a drilling-intensive technology closer in spirit to shale oil and gas development than to installing solar panels or wind turbines. Section 05. Products and Services. Enhanced Geothermal Systems. Traditional geothermal power only works in a handful of naturally hot, naturally permeable locations on Earth. Think Iceland or California's geysers field. Fervo's core innovation is applying horizontal drilling and multi-stage well stimulation, techniques perfected by the shale oil and gas industry over the past 2 decades, to create an engineered underground reservoir almost anywhere hot rock exists at a drillable depth. Fervo drills a pair of horizontal wells thousands of feet underground, connects them through the engineered reservoir, and continuously circulates water between them. Cold water goes down one well, picks up heat from the rock, and comes back up the other well as steam or hot fluid to drive a power generation turbine. Fiber optic distributed sensing. Fervo uses fiber optic cables run down each wellbore to monitor temperature and flow in real time along the entire length of the well, a technology borrowed from advanced oil field monitoring. This lets engineers see exactly how heat and fluid are moving underground, which is critical for optimizing where to drill and stimulate additional wells within a geocluster development area. Geoclusters, geoblocks, and power generation. Fervo organizes its projects into geoclusters, broad geographic development areas which are built out in modular geoblocks of roughly 50 megawatts each. Cape Station Phase 1 comprises the first approximately 100 megawatts, or 2 geoblocks. Phase 2 adds 8 further 50-megawatt geoblocks for approximately 400 megawatts. Each geoblock's heat is converted into electricity using organic Rankine cycle turbines supplied through a strategic partnership with Italian manufacturer Turbident, a well-established technology for converting moderate temperature heat into electricity efficiently. Digital twin and AI platform in development. In June 2026, Fervo announced a collaboration with Pacific Northwest National Laboratory to build an AI-powered digital twin platform using NVIDIA accelerated computing and DOE supercomputing resources to integrate real-time field data with physics-based modeling. Management has targeted platform implementation around 2029. This remains an early-stage research initiative rather than a near-term revenue driver. Picture 2 straws drilled thousands of feet down into hot rock, connected underground. Water goes down one, comes back up the other as steam, and that steam spins a turbine, 24 hours a day, regardless of weather. That is in essence what an EGS geoblock does. Section 06, Industry Overview. U.S. electricity demand is growing for the first time in roughly 2 decades, driven overwhelmingly by AI data centers, along with broader electrification and industrial reshoring trends. Utilities and hyperscale technology companies are actively seeking sources of firm power, electricity available 24 hours a day, 7 days a week, because intermittent renewables like solar and wind, while cheap, cannot reliably meet data center-grade demand without expensive battery storage at scale. This dynamic has fueled intense interest in both advanced nuclear, SMRs, and enhanced geothermal as complementary always-on clean power solutions. Geothermal's traditional limitation has been geographic. Naturally occurring hydrothermal resources exist in only a small number of locations worldwide. The Department of Energy has estimated that enhanced geothermal techniques could unlock a vastly larger resource base than conventional geothermal, by making hot, dry rock formations across much of the western United States economically viable, a shift broadly analogous to how horizontal drilling and hydraulic fracturing unlocked shale oil and gas resources that were previously considered inaccessible. Government policy has also played a supporting role. Federal clean energy tax credits materially improve project economics, though such credits remain subject to the political and legislative uncertainty common to all U.S. clean energy incentive programs. As with the SMR nuclear sector, the EGS industry remains pre-commercial at true utility scale. As of this report's publication, no company, including Fervo, has completed a utility-scale EGS project of the size and modular design Fervo is now attempting at Cape Station. Section 07 Market Opportunity. Fervo's near-term commercial visibility is anchored by 658 megawatts of binding power purchase agreements, which the company estimates represent approximately $7.2 billion of contracted revenue over the life of those contracts. This is meaningfully more concrete than a typical early-stage backlog, since power purchase agreements are legally binding long-term contracts rather than expressions of interest, though investors should still recognize that contracted revenue is only realized as megawatts are actually built, commissioned, and operated over many years. Customer summary. Google, geothermal framework agreement for up to 3 gigawatts of geothermal capacity through 2033, including 1 gigawatt of proposed projects within the first 2 years, builds on the earlier Project Red pilot in Nevada. Southern California Edison, cited by the company among its power purchase relationships, specific contracted volume information is not publicly available. Cape Station site level, permits secured for up to 2,000 megawatts at the Beaver County, Utah site, providing what the company describes as a decade-long expansion runway beyond Phase 1 and Phase 2. Blandford Geocluster. New Utah development area. Record 555-degree Fahrenheit well. Confirms strong resource quality. Company has cited potential capacity in the multi-gigawatt range at this and other geoclusters. Beyond Cape Station and Blandford, Fervo has described a broader multi-gigawatt development pipeline spanning additional geoclusters, though the company's aggregate long-term pipeline figures should be treated as directional resource potential rather than contracted, financeable capacity. The core market opportunity thesis is straightforward. If Fervo can prove it can replicate Cape Station's success at other sites, the addressable market is effectively bounded only by the availability of suitable geology, transmission access, and long-term power buyers seeking firm, clean electricity. A very large, largely untapped market relative to Fervo's current 658 megawatts of contracted capacity. Competitive landscape. Sage Geosystems. Private. EGS and geopressured geothermal developer, also pursuing geothermal energy storage applications. Evor Technologies. Private. Closed-loop geothermal technology, the Evor loop, that circulates fluid without requiring underground reservoir stimulation. Different technical approach than Fervo's open-loop EGS. Quaise Energy, private, developing millimeter wave drilling technology aimed at reaching ultra-deep, ultra-hot, super-hot rock resources. Earlier stage and more technologically gazelle than Fervo's approach. Ormat Technologies NYSE ORA, established, profitable conventional geothermal operator with decades of operating history, focused on traditional hydrothermal resources rather than EGS, but the closest existing public pure-play geothermal comparable. Advanced nuclear developers, Oklo, NuScale, X-Energy, TerraPower, and Kairos Power, not direct technology competitors, but compete for the same category of hyperscaler and utility firm clean power purchase agreements. Where Fervo stands. Analysts covering the stock have consistently described Fervo as the clear commercial leader among EGS developers, citing its scale of construction activity, its Google relationship, and its $7.2 billion contracted backlog as evidence of a multi-year head start over Sage Geosystems, Evor, and Quaise, none of which have announced utility-scale construction projects of comparable size. Roth Capital, initiating coverage with a buy rating, explicitly called Fervo the leading pure-play enhanced geothermal systems developer. Against advanced nuclear developers, Fervo's pitch is faster construction timelines and lower upfront capital intensity per project relative to first-of-a-kind SMR reactors, though nuclear proponents would counter that reactors offer higher energy density and longer asset lives. Both technologies remain unproven at full commercial scale. Management team. Tim Latimer, co-founder, chief executive officer, and chairman of the board. Co-founded Fervo in 2017 and has served as CEO and a board member since 2018. Before Fervo, Latimer worked as a drilling engineer at BHP Billiton and as a consultant with Biota Technology. He was also a fellow at Activate and the Clean Energy Leadership Institute. Latimer holds a BS in mechanical engineering from the University of Tulsa, along with an MBA and an MS in environment and resources both from Stanford University. He was named an MIT Technology Review Innovator Under 35 in 2024, a Presidential Leadership Scholar in 2022, and received the Geothermal Rising Pioneer Award in 2023. Latimer and co-founder Norbeck retained super voting control of the company through Class B shares. Dr. Jack Norbeck, co-founder and chief technology officer, co-founded Fervo alongside Latimer in 2017 and has served as CTO since. Prior to Fervo, Norbeck was a postdoctoral fellow at the USGS Earthquake Science Center, giving him specialized expertise relevant to reservoir stimulation and induced seismicity management, a key technical and risk management consideration in EGS development. David Ulray, chief financial officer, oversees Fervo's financial operations, including its transition from a privately funded development company to a reporting public company following the May 2026 IPO, and its growing use of non-recourse project financing structures. Sarah Jewett, chief operating officer, promoted to COO in June 2026 after 6 years in progressively senior leadership roles at Fervo. The newly centralized COO role is intended to help the company scale construction and operations across multiple simultaneous geocluster projects with greater speed and discipline. Governance note: Latimer and Norbeck maintain effective control of Fervo through Class B supervoting shares put in place ahead of the IPO. This structure means public shareholders have limited ability to influence major corporate decisions, even though the founders' own economic ownership stakes align them financially with long-term shareholder value. Section 10. Financial performance. Fervo has reported only 1 quarter of results as a public company. Q1 2026, released June 22, 2026, so no multi-year public company financial track record yet exists. Quarterly comparison: Q1 2025 versus Q1 2026. Revenue: 0 versus $61,000, modest but first revenue recognized. Operating loss: negative $9.9 million versus negative $20.1 million, widened. Net loss: negative $9.1 million versus negative $31.8 million, widened sharply. Capital expenditures: $105.4 million versus $172.8 million, up 64%. In plain terms, Fervo is not yet a revenue-generating company in any meaningful sense. It is a construction company racing to finish its first power plant. The widening net loss and rising capital expenditures both reflect the company ramping up simultaneous construction across Cape Station Phase 1, Phase 2, and early development work at Blandford and other geoclusters, not deteriorating underlying unit economics. The real financial story is the balance sheet. Fervo entered 2026 with roughly $1 billion of cumulative private capital raised, added $280.8 million of quarter-end cash, and then closed a further $2.2 billion IPO and $421.4 million of non-recourse project debt shortly after quarter-end. Capital raising history: 2017 to 2025, more than $1 billion raised across multiple private funding rounds, including a $462 million Series E led by B Capital, from investors such as Devon Energy, Capricorn DCVC, and Breakthrough Energy Catalyst. June 2026, $421.4 million non-recourse project financing, Project Granite Facility, for Cape Station Phase 1, described as the first such financing for an enhanced geothermal project globally. May 2026. Initial public offering raising approximately $2.2 billion in gross proceeds. Section 11. Detailed analysis. Q1 2026 earnings report. Revenue. Total revenue was $61,000 versus analyst estimates of roughly $343,000 to $490,000. A significant miss, though against a base so small that the dollar difference is immaterial to the investment thesis. Management has not disclosed the specific source of this early revenue in detail. Investors should treat this line as essentially a rounding error until Cape Station Phase 1 reaches commercial operation later in 2026. Gross margin and operating income. With revenue this minimal, a traditional gross margin figure is not meaningful. Operating loss was $20.1 million, up from $9.9 million in Q1 2025, reflecting higher headcount, project development costs, and the costs of operating as a newly public company including legal, audit, investor relations, and compliance expenses. Net income. Net loss was $31.8 million, compared to $9.1 million a year earlier, driven by the wider operating loss, plus non-cash warrant remeasurement losses tied to Fervo's pre-IPO capital structure. Diluted loss per share was negative $3.72, dramatically worse than the negative 0.5 to negative 0.7 cents analysts had modeled, but this large miss is substantially a function of Fervo's pre-IPO share count and capital structure, rather than a sudden deterioration in the underlying business. Investors should expect per-share metrics to look very different and more comparable across quarters, beginning with the Q2 2026 report, which will be the first to reflect the post-IPO share count for a full quarter. Capital expenditures of $172.8 million, up from $105.4 million in Q1 2025, were the dominant cash use in the quarter, funding continued construction at Cape Station and early development activity at other geoclusters. Management indicated roughly $1.1 billion of the company's near-term capital expenditure plan is allocated specifically to Cape Station, with approximately $70 million allocated to early and advanced development activities across the broader portfolio. Balance sheet as of March 31, 2026. Cash and cash equivalents, $280.8 million. Restricted cash, $6.0 million. Long-term debt, $186.6 million. Subsequent events. Gross IPO proceeds of approximately $2.2 billion received May 14, 2026. Cape Station Phase 1 Project Debt Facility, Project Granite, of $421.4 million secured, with $294.6 million undrawn. The $280.8 million cash balance above reflects Fervo's pre-IPO position. It does not include the approximately $2.2 billion of IPO proceeds received the following month. Guidance. Fervo has not issued formal quarterly or annual revenue guidance, consistent with its pre-commercial stage. Management provided capital expenditure guidance of approximately $1.2 billion for the 12 months from Q2 2026 through Q1 2027, primarily allocated to Cape Station Phase 1 and Phase 2 construction and other geocluster development, effectively a construction budget rather than a revenue or earnings forecast. Management commentary. Management characterized the quarter as a pivotal milestone, highlighting the May 2026 NASDAQ listing as validation of the vision, rigor, and determination of the team, its partners, and its investors. Executives emphasized that Cape Station Phase 1 remains on track for first power in Q4 2026, that Phase 2 construction commenced during the quarter with all long lead equipment secured and initial wells drilled, and that the Google Geothermal Framework Agreement and the Blandford Resource Validation together support management's confidence in replicating Cape Station's success at additional sites. Key changes versus previous quarter. First quarter reported since the S-1 filing, immediately ahead of the May 2026 IPO close. Capital expenditures rose 64% year-over-year as construction activity ramped across multiple simultaneous projects. Commenced Cape Station Phase 2 construction and validated a record hot well at the new Blandford geocluster. Secured the first non-recourse project financing in the history of the enhanced geothermal industry, $421.4 million for Cape Station Phase 1, a meaningful de-risking and bankability milestone for the sector as a whole. Balance sheet transformed post-quarter end with IPO close, moving from $280.8 million of pre-IPO cash to a pro forma position including approximately $2.2 billion of additional gross proceeds. Section 12. Growth drivers. Catalyst 1. AI-driven demand for firm clean power. Hyperscale data center operators need continuous reliable electricity, and Google's own up to 3 gigawatt framework agreement is direct evidence that at least one major cloud provider views enhanced geothermal as a credible, scalable part of its long-term power strategy. Catalyst 2. Proven replicable project design. Cape Station's modular geoblock design, combined with 2,000 megawatts of site-level permits, gives Fervo a template it can theoretically replicate at Blandford and future geoclusters without resolving every engineering and permitting challenge from scratch. Catalyst 3. Growing bankability of the EGS asset class. The Cape Station Phase 1 project financing, the first non-recourse debt facility ever secured for an enhanced geothermal project, signals that institutional lenders are beginning to treat EGS as a financeable infrastructure asset class, potentially lowering Fervo's future cost of capital. Catalyst 4. Expanding high-quality resource pipeline. The record 555-degree Fahrenheit well at Blandford confirms Fervo can identify and develop premium geothermal resources beyond its original Cape Station site, supporting the credibility of its broader multi-gigawatt development pipeline. Catalyst 5. Strong, well-capitalized balance sheet. With roughly $2.2 billion of fresh IPO capital, plus growing access to non-recourse project debt, Fervo has substantial runway to fund its stated $1.2 billion near-term capital expenditure plan without urgent reliance on additional equity issuance. Section 13. Key risks. Risk 1. Pre-commercial, pre-revenue core business. Fervo generated just $61,000 of revenue in the most recent quarter. The entire investment case depends on successfully completing first-of-a-kind utility-scale EGS construction, something the company has not yet done, and something no company anywhere has done at this specific scale. Risk 2. Construction and schedule execution risk. Cape Station Phase 1's first power target of Q4 2026 leaves little room for delay before investor patience is tested. Large infrastructure and drilling projects have a well-documented history of cost overruns and schedule slippage across the broader energy industry. Risk 3. Rapidly rising cash burn. Capital expenditures rose 64% year-over-year to $172.8 million in a single quarter, with a further $1.2 billion planned over the following 12 months. Any shortfall in project financing or cost overrun could require additional dilutive capital raises. Risk 4. Geological and reservoir risk. EGS relies on engineered underground reservoirs created through well stimulation. Well productivity can vary meaningfully between sites, and stimulation activity carries an inherent industry-wide risk of induced seismicity that regulators and local communities scrutinize closely. Risk 5. Customer and contract concentration. A substantial share of Fervo's disclosed backlog and long-term growth narrative is tied to a single anchor customer relationship, Google, and framework agreements for future gigawatts are not the same as fully binding, individually financed project contracts. Risk 6. Policy and tax credit sensitivity. Project economics depend in part on federal clean energy tax credits and their monetization through structures like the Liberty Mutual Tax Equity Agreement. Changes to U.S. clean energy policy could materially affect future project returns. Risk 7. Intense, well-funded competition. Sage Geosystems, Evor, and Quace Energy are all pursuing overlapping geothermal opportunities with different technical approaches, while advanced nuclear developers, Oklo, X Energy, TerraPower, NewScale, and Kairos Power, compete for the same category of long-term firm clean power purchase agreements from hyperscalers and utilities. Risk 8. Founder-controlled governance. Latimer and Norbeck's Class B supervoting shares give public shareholders limited influence over major corporate decisions, a structure common among founder-led companies, but one that concentrates governance risk. Risk 9. Stock volatility and limited trading history. FRVO shares have already swung from a post-IPO high of $42.65 to a 52-week low of $22.66 within roughly 2 months of listing, illustrating how sharply sentiment can move on a pre-commercial infrastructure story with very little historical trading data to anchor valuation. Valuation. Traditional valuation metrics such as price to earnings or price to sales are not meaningful for Fervo given its negligible current revenue. Instead, investors and analysts generally frame Fervo's valuation relative to its contracted power purchase agreement backlog and the pace at which that backlog is likely to convert into operating cash-generating megawatts over time. Key metrics as of July 20, 2026. Share price, approximately $25.37. Market capitalization, approximately $7.3 billion. IPO price, $27. Current price is approximately 6% below IPO level. All-time high on May 15, 2026, $42.65. 52-week low on July 16, 2026, $22.66. Contracted PPA backlog, approximately $7.2 billion for 658 megawatts, roughly comparable in magnitude to current market cap, though realized over many years of operation, not immediately. Sell-side views. Sell-side sentiment has been unusually one-directional for a stock trading well below its post-IPO high. As of mid to late July 2026, Roughly 10 analysts rate FRVO a buy with 0 sell ratings, and price targets cluster well above the current trading level. Piper Sandler at $51, Baird at $50, Bernstein at $47, Barclays at $48, Roth Capital at $45, and RBC Capital with a reiterated buy. Notably, BofA's recent upgrade to buy from neutral came alongside a price target cut to $36 from $40, a reminder that even bullish analysts have been trimming absolute price targets as the stock has sold off, even while maintaining a positive rating based on long-term project economics. The wide gap between the approximately $46 average analyst price target and the approximately $25 current share price implies substantial theoretical upside on paper, but this gap should be read with caution. With only 1/4 of public financial history and first commercial powers still pending, current sell-side targets rest heavily on long-dated assumptions about Cape Station's successful completion and the broader pipeline's conversion into contracted, financed projects, assumptions that remain unproven. Section 15. Upcoming catalysts. Cape Station Phase 1 First Power, targeted Q4 2026. The single most important near-term event for the stock, the world's first delivery of power from a utility-scale enhanced geothermal project at this design, a major de-risking milestone if achieved on schedule. Next quarterly earnings, Q2 2026, expected September 2, 2026. First quarter to reflect the post-IPO share count and capital structure for a full period, making per-share metrics more comparable going forward. GeoBlocks 2 and 3 commissioning, targeted Q1 2027, continued build-out of Cape Station capacity beyond the initial first power milestone. Cape Station Phase 2 progress, through 2028, targeted commercial operation date. 400 megawatt expansion. Construction and drilling milestones will be closely watched as evidence Fervo can scale beyond Phase 1. Additional definitive agreements, ongoing. Conversion of the Google Framework Agreement's remaining gigawatts, or new hyperscaler and utility relationships, into binding site-specific power purchase agreements, would expand and de-risk the backlog. Blandford and other geocluster development, ongoing. Further well results and project announcements would test whether Fervo can replicate Cape Station's resource quality and economics at new sites. Additional project financing agreements, ongoing. Further non-recourse debt facilities in the vein of the Cape Station Phase 1 financing would continue to validate EGS as a financeable infrastructure asset class. Section 16. Long-term outlook. Fervo's long-term outlook, like that of other first-of-a-kind infrastructure companies, is best understood as a binary-leaning story rather than a smooth growth trajectory. If Cape Station Phase 1 reaches first power on schedule in Q4 2026, and Phase 2 follows through to its targeted 2028 commercial operation date without major setbacks, Fervo will have proven the core replicability of its GeoBlock design, a proof point that could dramatically accelerate both its own multi-gigawatt pipeline and the willingness of utilities, hyperscalers, and project lenders across the industry to back enhanced geothermal at scale. If, instead, the company encounters the kind of drilling, permitting, or construction setbacks common to first-of-a-kind energy infrastructure projects, both the Cape Station timeline and the broader pipeline could see meaningful delays, testing investor patience, and potentially requiring additional capital. The broader structural backdrop, sustained AI and electrification-driven demand for firm, carbon-free power, provides a long runway of potential demand, largely independent of which specific companies succeed. Fervo's key long-term differentiator, if its execution holds, is its multi-year head start in proving EGS can be built and financed at utility scale, combined with 2,000 megawatts of already permitted capacity at a single site, Cape Station. That alone would represent a multi-billion-dollar revenue opportunity if fully built out over the coming decade. Section 17. Bull Case. Cape Station Phase 1 delivers first power on schedule in Q4 2026, validating Fervo's modular GeoBlock design at true utility scale. Phase 2's 400 megawatt build-out proceeds through 2028 without major cost overruns. The Blandford GeoCluster and other new sites confirm Fervo can replicate premium resource quality beyond its original project. The Google Framework Agreement converts additional gigawatts into binding power purchase agreements, and new hyperscaler or utility relationships emerge. continued success in securing non-recourse project financing lowers Fervo's blended cost of capital and reduces reliance on dilutive equity issuance. And AI-driven demand for firm clean power continues to outstrip the industry's ability to supply it. In this scenario, Fervo transitions from a pre-revenue construction story to a genuine scaling independent power producer, and the stock re-rates toward or beyond current sell-side price targets in the $45 to $51 range. Bear case. Cape Station Phase 1's first power date slips beyond Q4 2026, as is common with first-of-a-kind energy infrastructure projects, denting confidence in management's ability to execute on schedule. Capital expenditures continue rising faster than the pace of financed capacity additions, forcing Fervo back to capital markets for dilutive follow-on funding well before Phase 2 reaches commercial operation. Induced seismicity concerns or well productivity shortfalls at Cape Station or Blandford raise questions about the underlying geology and technology's reliability at scale. The Google Framework Agreement fails to convert meaningfully beyond its initial gigawatt commitment, and no comparable new hyperscaler relationship emerges, and broader firm power for AI capital increasingly flows toward advanced nuclear alternatives instead. In this scenario, Fervo remains a capital-intensive, pre-revenue story for longer than the market currently expects, and the shares continue trading well below both their IPO price and post-IPO high, as investor patience for first-of-a-kind infrastructure execution wears thin. Section 19. Final Investment Conclusion. Fervo Energy's IPO and first quarterly report as a public company tell a consistent story. This is the clear commercial leader in a genuinely important, technologically credible new category of firm clean power, backed by a marquee anchor customer, Google, a record-breaking IPO, and the first-ever project financing secured for an enhanced geothermal facility. At the same time, the company remains, by any conventional financial measure, pre-revenue. $61,000 of quarterly revenue against $172.8 million of quarterly capital spending is not a typo. It is the accurate financial snapshot of a company still building its first power plant. For investors, the central question is less, does enhanced geothermal have a future as a clean, firm power source? The Google relationship and the project financing milestone both suggest institutional validation is building. And more, will Cape Station Phase 1 actually deliver first power on schedule in Q4 2026? And will Fervo prove it can replicate that success repeatedly across Phase 2 and beyond, without requiring dilutive financing along the way? The company's roughly $2.2 billion of post-IPO capital provides meaningful runway to attempt to answer that question. But it does not eliminate the execution risk inherent in first-of-a-kind infrastructure construction. Bottom line, Fervo Energy is best understood as a high-conviction, high-execution risk position within the broader firm power for the AI-era investment theme. Well-capitalized and commercially validated by real contracts, but still years away from proving it can consistently deliver megawatts on time and on budget at the scale its valuation already implies. This report does not constitute a recommendation to buy, sell, or hold FRVO shares. Readers should review the complete Form S-1A and 10Q filings on SEC EDGAR and consult a qualified financial advisor before making any investment decision.